Well, SRS Rocco report. He's got a good one here. Massive central bank asset purchases. Last-ditch effort to save economy and cap gold price, which also means cap gold and silver, as you know. I thought, what is this? What are these old central bankers up to? Same stuff they've always been up to. The central banks bought a staggering $1.5 trillion in assets in the first 5 months of the year to keep the economy from imploding, while at the same time capping the gold price. Yes, it's true. $300 billion a month of central bank asset purchases pushes up stock, bond, and real estate values while it depresses or caps the gold or silver price. The amount of central bank asset purchases are now reaching insane levels. You say, and here's the biggest, this makes me angry, and it should make everybody else angry too. They're going to buy up stuff that benefits, once again, one class or one type of person, bankers. The bankers win. They win if the stock market goes up, right? Stocks and bonds, they win. Real estate value, of course they win. They're putting loans on these super high, way expensive housing that should be nowhere near where they are today. They're making the money on those because they're writing the loans. The banks win. But if the Fed's coming in and propping up markets and buying up stuff, buying up assets, as they say, how come the Fed just doesn't throw the local food restaurant you go to a bone just for free? Here you go. We're going to buy up some, dinners, but we're just not going to show up to eat them, so don't even cook them. Best Buy, electronics store or something, we're just going to throw you guys a bone. Some other retail businesses, since there's a retail apocalypse, we're going to throw you guys a bone and buy up shares in your company for the hell of it. No. Those guys aren't listed like in the Dow, the S&P 500, so their stocks aren't going to rise. Right? So the Fed's going to intervene. Shouldn't it be spreading the love and intervening everywhere? And last but not least, shouldn't it actually be intervening directly to you and me? We're the one that has all this debt, credit card debt, student loan debt, housing debt, all kinds of debt. We are filled with debt. And what are people doing? Well, let me say what I was going to say. People are going to take the money and pay off debt. People aren't just going to pocket the money and not pay off their debt. And I'm going to tell you why I know that. It's probably obvious anyways, but I got people emailing me, Jason, man, the Ripple stuff, I made money, and the Ethereum went up so much recently, man. I've got this down. I'm going to pay off my debt early. I'm going to pay that debt off. People will pay off their debts if they're handed money. They're going to. And isn't that part of the problem? Well, the banks are insolvent and they need the help. They're not going to use that word, insolvent, of course. We're going to give them the help. You give us the money. We pay off our debts. Who's ultimately the debt going to? Some banker. Some bank. No, can't have it that way. We want to continue getting you guys to suck off you guys and your money, but we also want to bail out for ourselves. So we want our cake and eat it too. And the Fed is obliging. So anyways, the amount of central bank asset purchases are now reaching insane levels, and they have to. It is the same thing as being a drug addict. Once someone starts down the road of drug addiction, it takes more and more of the drug to reach the same effect. Thus, when central bankers started purchasing assets to prop up the market, they have to continue. And they have to continue buying even more and more and more. In a previous article, I published this chart, which I'll pull up for you, showing central bank asset purchases up until the first 4 months of 2017. Okay? You can see how it went crazy after 2008. That's when this craziness really started. Okay? This chart came from a Zero Hedge article that showed the central banks purchased $1 trillion in assets in just the first 4 months of 2017. And the total of their balance sheets reached, combined, all the central banks, $14.6 trillion. In just 5 years, central banks purchased $7 trillion in assets. However, in the first 4 months of 2017, they ramped it up to $1 trillion, which means the central bank asset purchases could reach $3.6 trillion annualized in 2017, surpassing half of all official purchases in the past 5 years. That is a lot of propping up, folks. And it also has totally depressed and capped the price of gold. But he says, not for long. What's this? However, before I get into some really interesting charts on just how crazy things are getting in central bank land, I would like to share some of my sentiments about what is taking place in the good old US of A. Next part is titled, Brain Damage and Insanity have taken root in America. Unfortunately, many Americans are now suffering from increased levels of insanity and brain damage, and it's only getting worse. And before you... Oh, stop that. Well, hold on. How many people on prescription drugs these days? Record numbers, especially in the U.S. So it's only getting worse. That being said, I really can't blame them. Every day, most Americans, from sunup to sundown, receive a constant flow of mainstream media advertising and propaganda. And it's even more damaging for the little tots and kids. From infancy to adolescence, kids receive a tremendous amount of brainwashing via the TV, iPhone, and internet. When a tiny tot is sitting in front of a TV all day watching someone named Sparky the Clown telling the child to eat sugar loaded with a smattering of cereal, this is the first step in turning that infant into an attention deficit hyperactive kid that will not only drive his or her mother and father completely insane, but also all the teachers and public that has to deal with this wonderful child in the future. As the child grows up, it now needs a lot of sugar or the screaming starts. I know of this firsthand when I travel on the road and stop at one of the newer mega travel shops on the interstate. Maybe some of you have been into one of these new mega travel stops that have RV and big truck fuel pumps along with 100 gas pumps for regular cars and trucks. On a busy travel weekend, I would recommend anyone who hasn't visited one of these fine establishments to take a bit of time out of your day to do so. When you get in there, it can be complete chaos. Of course, there are many fully wired adults and lots of screaming kids looking for their junk food fix. I have seen some kids grab big bags of chips, take them to their parents standing in line at the checkout counter, and when the parents said no, the kid took the bag and threw it back on the wrong place in the shelf. Many times the bag fell on the floor, and the parent did the right thing and ignored it. LOL. Yeah, leave it on the floor, let the clerk deal with it. But doing the right thing, in other words, they didn't let their kid have it. I gather if you are part of the mass exodus of families out of the suburbs on the weekend getaway, this may seem normal. The chaos, Basically, these mega travel stops are frogs boiling in the water, and no one seems to notice, and nobody seems to care. Anyhow, after Americans spend top dollar just to live in a McMansion or some other shoddy-built suburban home with all the bells and whistles, they have to spend even more money to get away from it all during the weekend. Of course, this makes perfect sense when we have gone completely insane. Think about this for a minute. Many Americans spend 40 to 60 hours during the week to afford the dream home with the white picket fence in the suburbs located 6 feet from their neighbor. But as soon as Friday rolls around, they grab the kids, the RV, and get the hell out of there as fast as possible. I'm kind of liking where this guy's going. Right? My neighbor is about 8 feet away. And you know which neighbor I'm talking about. The most wonderful neighbor a guy could ask for. If you like riffraff, that is. So this is our new economy. Americans working jobs they hate to buy a house they can't wait to leave just as soon as the weekend arrives. And all of this is being propped up by massive amounts of debt and central bank asset purchases. That's the insanity. Now let's discuss the brain damage. Brain damage impacts Americans in different ways. However, the majority who have the illness don't realize they are affected. So they continue on their merry life, not realizing the brain damage is getting even worse. So what do I mean by brain damage? It's quite simple. A person who suffers from brain damage actually believes a new credit card in the mail is like winning a small lottery. Thus, they are able to go out and buy more garbage and crap to fill up an already stuffed house or rental storage facility. Brain-damaged Americans no longer understand thrift frugality or prudence. Rather, Americans are racing 70 miles per hour down the interstate, spending money they don't have on lots of screaming kids just to get away from it all. And it gets even worse. No, I'm not kidding. In the past, I have tried to share some of what I know about the economic and financial insanity to family and friends, but the response was normally the same, that I was losing my mind. And don't worry, everything is fine. You see, when someone has severe brain damage, they believe bad is good, wrong is right, debts are assets, and so on and so forth. But well, hold on, wait a minute, Mr. SRS Rocket Report. I gotta tell you, you might have been wrong on that one, where it says debts are assets. You know, they believe debts are assets. The Federal Reserve, the federal government, says that the $1.4 trillion in student loan debt that's not been paid right now is an asset. It's on their books as an asset. So if people hear that, they may think the same thing. Well, all this debt I have is an asset, right? Because we're so stupid. Lastly, when someone responds by saying gold is just a barbarous relic, well, then you know the brain damage is now irreversible. The poor slob is past the point of no return and is not curable. All we can do is keep our mouths shut during holiday get-togethers, eat the junk food, and hope and pray there aren't too many screaming kids. Okay, enough of my rant. Let's get back to the good stuff. Central bank asset purchases and their impact on gold. As I mentioned in the beginning of the article, central banks purchased $1 trillion of assets in just the first 4 months of the year. However, they did one better, as they added another $500 billion in May. Just May alone. So the total for the first 5 months of the year is a staggering $1.5 trillion. Also, we can see that the central bank balance sheet is now $15.1 trillion, which is up from $3.5 trillion before the 2008 U.S. housing market and banking collapse. Boy, that's a lot up, isn't it? If we compare the central bank balance sheet as a percentage of GDP, we have the following wonderful chart. In case you want to see that. More and more and more. Aggregate balance sheet of large central banks, trillions of dollars. And again, this is 2014, 15, 16. I mean, this is no, like from 2000 to 2008. If you were to look at that, you'd still say that's not looking good, right? Because even if you were to, I can't really draw a line right here right now, but actually I might be able to, but I'm not going to do it. I don't have time to mess with this thing. You could say, okay, right where around this blue, this little like navy blue or sky blue, whatever this is, sky blue. Navy's down here, sky blue here. We'll call it 22%. You could say, it looks like it'll be about that 20, 21, 22%. And that still wouldn't be good if you were to look at that. Like, whoa, going up is not good for this. But then 08 happened. And it went like it almost went on like as John Teeter would say, it went on another world line. Whole different world line. 2008, so completely different. And then it took off. And this gradual inclination became insane inclination until around right here, just slightly after 2014, getting into 2015. It became even steeper and more insane. And considering what he just said about the month of May alone, boy, oh boy, is this probably not going to look good. So anyway, if we are not suffering from brain damage, we can clearly see here that the central bank balance sheets now account for nearly 40% of GDP. The reason the total central bank balance sheet in the chart above is higher than the previous chart is that this one includes China's official bank balances, as in the People's Bank of China. If the central bank's balance sheets now account for 40% of GDP, well, then we are in serious trouble when the punch bowl is taken away. Also, according to a recent Zero Hedge article, Nothing Else Matters, central banks have bought a record $1.5 trillion assets in 2017. They republished the chart below and stated the following. I'll give you a little glimpse of that. Republished this chart. If Deutsche Bank warned of a red line for risk assets at the $200 billion a month for central bank asset purchases, then what in the hell is going on when they are now buying $300 billion a month? And how much is $300 billion a month? It's quite a lot when we look at the following chart below. Central bank monthly asset purchases versus value of monthly gold mine supply. Isn't that amazing? As the central banks purchased an average of $300 billion a month in assets to prop up the markets, it totally overshadows the $10.7 billion a month of global gold mine supply based on spot price of $1,250, which, whatever. Thus, central bank monthly asset purchases are 28 times more than the value of the global gold mine supply. This is totally insane when we realize gold is still a monetary asset on central banks' balance sheets. However, it is more incredible when we compare central bank asset purchases for the first 5 months of 2017 versus gold. According to the data I published in my article, How High Will Silver's Value Increase Compared to Gold During the Next Crisis, total global gold investment is approximately $3 trillion. That's everything, which includes central bank gold inventories and all large and small public-private gold holdings. So we can plainly see in the chart above, which I'll just show you in case you want to see that too, that $1.5 trillion in central bank asset purchases in just the first 5 months of the year would have bought half of the entire global gold investment. Repeat, half of all global gold investment. That's how much they printed in just the first few months of this year, 2017. So you can clearly see why, I hope, Bitcoin, altcoins, etc., are going ape shit, because we are technically in a hyperinflationary environment, and their prices are reflecting it. Just as much as they're printing money over here, that's what should be happening to gold and silver. But because they control gold and silver through their fake fraudulent COMEX market with the paper contracts derivatives, they push the price wherever they want, and they just keep a stranglehold on it. So anyone who looks over there to see, is there a problem? No, there's no problem at all. Price is staying relatively stable for gold and silver, which means the overall economy, the market, everything is stable as well. But then you look over at cryptos, and that is telling you there's a sign of unprecedented hyperinflation. And considering that they're printing trillions, $1.5 trillion the first few months, that's the response you would expect. But you would expect that in gold and silver. But again, because they're rigged and controlled, you look at the thermometer gauge, and the thermometer gauge tells you it's nice outside, but really it's 20 below zero. Anyways, which brings me to the subject of frustrated precious metals investors. I continue to see precious metals investors who are extremely frustrated by the so-called wrong calls by the analysts on the gold and silver price movements. Yes, it's true that many of us didn't realize the degree in which the central banks would go to prop up the markets. But this is getting completely insane now. If the central banks were to stop purchasing assets, then the markets would collapse. Heck, they are trying to collapse even with the massive central bank interventions. The signs are everywhere. Folks, without the over $12 trillion in central bank asset purchases since 2008, the gold price would have been stunningly higher, and so would the price of silver. This brings me to an excellent comment that gold analyst Jim Rickards made in a recent interview. He said that the 1998 long-term capital management hedge fund collapse that nearly took down the entire system was bailed out by the financial banks. 16 financial institutions bailed out LTCM. When the financial banks were in big trouble in 2008, the central banks bailed them out. However, who is going to bail out the central banks when they get into trouble? And they are getting into serious trouble. Unfortunately, there is no one left to bail out the system when the central banks finally lose control. If the central banks try to pull back on asset purchases, then the market will start to do a nosedive. This would likely motivate them to come back in with all guns blazing. So pay attention to the increase in central bank asset purchases as a clue to know when they are becoming desperate. This massive increase in central bank asset purchases is a last-ditch effort to prop up the market and cap the price of metals. While they may have more propping up to do, they will likely have to increase their level of buying even more. As it goes exponential, then we know the end is near. And if you, the viewer, wants to capitalize on a great deal from sdbullion.com, a 10-ounce silver bar at spot price, Proclaim Liberty Silver Bar, new customers only, go to sdbullion.com/jsnip4. new customers only, but it's a 10-ounce bar of silver at spot. In the link in the description box, I have several in there for different things, but you will find one to that exact link or to that site that'll take you there. So I think one more video to do. Take care.